Hello and welcome to this week's episode of Conservative ETF Investor. My name is Ken. Today's date is August 5th, 2017, and here is the stock market update for the previous week. Once this video gets, here we are on the homepage of Conservative ETF Investor. Once this video gets completed, I'll upload the link right here so you can click right there to access it or get it right directly from YouTube. Here is our current recommendations. The most important thing I want to tell you is that we are on hold. Recommendations is our current posture for the 7 ETFs over the 5 asset classes that we follow on Conservative ETF Investor. And that is everything. Of course, you could always pause the video and you can click through and see our price on transaction dates, our buy dates, and all of that information here. Okay, so that is everything that I want to share with you there. Let's see how the portfolio has done. Since our buy recommendations, the portfolio has done 16.45%, not including dividends. Going back over to here, you'll see that the total of all dividends thus far is 1.85% since the buy recommendation. So you add the 1.85% to the 16.45, and that is since the buy recommendations. Now, year to date, we are up 9.11%. And in comparison to that, to the S&P 500, the S&P 500 is up 10.42%, not including dividends. And also this one is not including dividends. All right, now we're going to jump right into our charts. The first chart that we want to look at is the S&P 500, symbol SPY, traded on the New York Stock Exchange, and it had a positive week, gaining 0.2% for the week. We use 5-year weekly charts. These are candlestick charts. Each one of these candlesticks that you see, let me go over here in the thumbnail. See this candlestick right here that I'm clicking on? Okay, so that's 1 week's worth of action. Because this one is clear, you know that it opened here and it closed here. This red one opened here and closed here. When it's black, it basically opened here, closed here, but because that close is higher than the previous week's close, instead of being clear, it's black. So that's how they do that. Okay, this ETF has been trading in an upward wedge pattern for quite some time, and we're smack dab in the middle. Last week was just a very bland week. We use 2 momentum indicators. We use the MACD, which is the top one at default settings, and underneath that, slow stochastics at default settings. And we currently, on the MACD, we are pretty much running parallel with the signal line. The part that's of a little concern is that we're at fairly high levels for the previous 5 years. So that we would like to see this oscillator come back down and oscillate closer towards 0. That can happen a number of different ways, but the easiest way for it to happen is for the ETF, in order to decline in price, then the oscillator will decline in price at the same time. As you can see here, when we declined in price, the oscillator went from here all the way down to -2. Okay, so that is the MACD. The slow stochastics is above 80. It's above its signal line, but it is topped and is traveling back down towards its signal line, indicating that it's losing momentum. Not too much to report here. Very, very boring. Let's move on to the next ETF that we want to look at. and that symbol is QQQ, which is the NASDAQ 100, and it had a negative week, or practically flat, down 0.13% for the week. Here we were trading in an upward wedge pattern, but NASDAQ being stronger than the S&P broke out above it, bounced off of that support level, and is still up here. Looking at it over in the thumbnail, it appears as if we are losing momentum here and it looks as if it's making a topping pattern. The MACD it looks like topped below the signal line and is beginning to travel back down, heading down this way. The slow stochastics you can see right here is clearly topped, is still above the signal line, but is getting ready to cross down beneath it. If this ETF loses just a few points and drops down to the 140-ish level or below, you will absolutely see the MACD go negative and the slow stow go negative and below 80. Okay, so that's the QQQ. Moving on to IWM. IWM, oops, just made a mistake there. Let me just correct that. Hang on just a second. Okay, so here is IWM, which is the small cap Russell 2000, symbol IWM. Had a negative week. Look at that, down 1.23% for the week. Now here we were trading in this upward trend channel pattern. The small caps was a little bit weaker, so it kept hugging this support line here. The previous week was the first week in which we saw a clear indication of breaking down below and closing down clearly below this trend channel showing weakness. So that's where we are standing right now with the Russell 2000. On the momentum indicators, you can see how we've topped, the MACD has topped below the signal line, traveling down. The slow stochastics also is trading below the signal line and below 80. It's currently at 76.99. Both of these are showing weakness. I get the impression that we are going to see more weakness ahead of the IWM. Now, the next question that I would like to know is where's the next support level? Well, right now we're closed right at 140.21, so it's right around there. And we have some support right here at 137, and then some more support at about 132. So those are the first two support levels. We have some really good support coming in right about here at 124 if we were to get down that far. Hypothetically, if we were to get down that far, that would be a drop of 11%. Quite honestly, this market could use an 11% correction. So if we were to come into that territory, that'd be a wonderful buying opportunity. Okay, so that's where we are with IWM. Let's move on to our next ETF, which is VEU. VEU is the Vanguard All World Excluding United States ETF, had a positive week, up 0.83%. And you can see the beautiful chart pattern here and how wonderful over the past 4 weeks this ETF has fared. It's done very well, especially since this breakout right there and just continuing to drift upward. The MACD is showing it's above its signal line and gaining momentum further away from it. Slow stochastics though has topped and looks like it's getting ready to head back towards and cross below its signal line, but it is still above 80. So that's where we stand with VEU, Vanguard All World Excluding United States. Moving on to our next one, TLT. So we do diversified portfolios here at Conservative ETF Investor. The next one is symbol TLT. This is the bond portion. We would like you to buy bonds individually, but for the purposes of this portfolio, we track the bond fund TLT, which is 20-year Treasury bonds. traded on the NASDAQ Stock Exchange, had a positive week, gaining 1.06%. Here you can see we're trading in this trading pattern between here and here, and it's just bouncing around is what it's doing, waiting to see what direction we're going to go in. Looking at the MACD to help us, it's just looks like it's getting ready to run just parallel with its signal line, not crossing, but it's still above the signal line and above zero, which are positive events. The slow stochastic has clearly bottomed, crossed above its signal line, and getting ready to travel up towards 80. That is showing signs of momentum, although over the past 3 weeks, we don't seem to be able to get above this mark right here, above this level right there. So if we can get up above and get beyond this, then we could at least go and test this next resistance line here. Okay, that's TLT. Moving on to VNQ. VNQ is real estate. Traded on Vanguard. It's the real estate investment trust. Had a negative week, losing 0.2%. You can see that we've been in this trading channel going back, since the beginning of 2017 abouts. And right now we are at the upper edge of this right there. So we're trying to see if we can break out above it or break down. And looking at the momentum indicators, you can see the turmoil that this ETF has been in for a while, but the slow stochastics is above its signal line and getting ready to break out above 80, which are both positive events. So this ETF may have enough momentum to get above this top's resistance line. If it can do that, the next resistance is up here, which is a fairly good amount of ways, which would be, if you weren't in the ETF, a good buying opportunity, and then use this as your stop. Okay, that's it for VNQ. Moving on to our last ETF of today. It is gold. So this is symbol GLD, traded on the New York Stock Exchange, had a negative week, losing 0.86% for the week. Coming over here, okay, this is a declining tops resistance line that we cannot get above. It's been in this pattern for years. You just can't get above it. And we are right smack dab closed right on it. You can see here that possibly 2 weeks ago, it looked like it was getting ready to go up, but instead of going up and breaking out, it broke down. But it didn't break down terribly. It's right on it. So we're waiting to see what this is going to do. Let's look at the momentum indicators here to give us an idea. The MACD is, it's just kind of hanging underneath the signal line. It's running flat to zero, can go in either direction. That's not really helpful. Looking over here at the slow stochastics bounced off a 20. It's above its signal line and traveling towards 80. That is good momentum. And it's low down here because it bounced off the 20. This could have enough momentum to finally break out above this declining tops, which would be a good buying opportunity, and using this as your stop sign, your stop loss limit order. That's gold. Now we have 2 more charts to look at today. The first one is the VIX. The VIX, now we've changed our chart. Now I'm looking, instead of a 5-year time horizon, it's a 1-year time horizon, and we use daily charts. This is the VIX, and this is the volatility indicator for the S&P 500, and basically it's an inverse indicator. When the VIX goes down, the S&P 500 goes up, and vice versa. This is chart is we have 2 moving averages here. The blue is the 50-day EMA, and the red is the 20-day exponential moving average. The blue is below the red. The ETF, the index is trading below the faster moving average. All of this is bullish for the S&P 500, showing that there is a lot of complacency, that people are not worried about the stock market at this time. Otherwise, these numbers would be spiking up and coming up, and you would have the blue above the red and all of that, and you don't have any of that. So that's showing for the S&P 500 that the market feels very comfortable investing in it. Now, looking at the last chart for today is the VXN. This particular indicator or an index, is the volatility indicator for the NASDAQ 100. So it's the same thing as the VIX, except it's looking at the NASDAQ 100, and this is the VXN. The VXN, you can see how more concerned people are about trading in the NASDAQ 100. The 50-day is above the 200. The index is trading, it closed right here, so it closed below both of them, but it's been bouncing right through these right now. That's why these two indicators, these two moving averages are trading almost parallel, is because it keeps going back and forth. So you can see more concern in the NASDAQ 100, which overall is generally bearish for the stock market. Generally, you'd like to see the NASDAQ leading the S&P 500 because that tells you that people are more comfortable with investing in technology. Now you see people getting away from technology and going more towards safety, which is the S&P 500 large cap, biggest 500 companies in the United States, which, by the way, 44% of them have bring in their revenues from overseas. So in and of itself, the S&P 500 is extremely well diversified. Okay, that is it. That concludes this week and all of the indicators that I wanted to show you. I hope you've enjoyed it. My name is Ken, and thank you for watching.